September is living up to its reputation. The markets are shaking out traders left and right. And with $100,000 on the line, I'm feeling that pressure in real time. Now here's the twist. If my account didn't just survive the week, well, it actually outperformed the NASDAQ. That wasn't supposed to happen in a month like September. But it all wasn't smooth sailing. I made one move this week that could either protect the portfolio from a nasty correction, or it would be a complete waste of money if I'm wrong. And I'll show you exactly what that was. So in this video, I'll walk you through how the account is holding up, the trades I made, including that controversial hedge, and the stocks that are quietly turning into some of my biggest winners. Let's dive in. Right now, the account sits at $116,117.53, up about 1% today, while the overall market was basically flat. Overall, over the last month, we're up almost 6%, which is exactly the kind of steady growth I want to see. Here's the kicker. We're not just keeping up with the NASDAQ, we're actually beating it. And that's with a defensive setup of 53% of stocks, 38% bonds and fixed income, and about 5% in leaps, plus covered calls on nearly every stock position. This is designed to reduce volatility and not chase huge gains. But somehow it's working better than expected. Why? Let me show you. This is the portfolio heat map. It doesn't include the options positions, but you can already see some names crushing it, like CDE, which I'll talk about in a minute. Mortgage REITs are also standing out. These things yield around 12 to 16%. And we made a bet months ago that when rates start coming down and volatility in rates come down, these would bounce hard. And sure enough, that's happening right now. This is exactly why I built this account. In September, a month that usually punishes traders, we're actually preventing volatility while still grinding higher. That's the edge we want. And by the way, a lot of people in the comments always say, why not just buy the SPY, bro? So let me throw that question out to you guys. Would you rather just buy the index and forget about it, or build something that's more tactical like the account I have here? Drop your thoughts below in the comments and I'd love to hear your take. All right, so let's get into the trades this week. So first up, we have BMNR. So we've been building a position here slowly. It's now about 1% of the account. The stock's been under pressure with all sorts of bad news, like the NASDAQ telling them they can't add more Ethereum into their treasury without creating, certain voting rights. And a lot of negative sentiment is hitting the entire sector. But that's here what caught my eye. The stock held strong right at a demand zone, and negative news usually drags the stock lower. But when the price resists that, that's a clue that big money might be supporting the stock. We've been buying around $41 to $42, which is really close to its NAV, the net asset value. Think of NAV like the sticker price of a car. If the stock's trading near or below that, you're basically buying $1 for $1, or even cheaper. Historically, these stocks don't stay at a discount for long. So we're adding slow and steady, not all at once, because crypto's weak right now, and in September it should get weaker. But I believe that this could be a strong rebound play towards about $70 once the sector stabilizes. So next move, clearing house. I sold some of these placeholders, Danny's, Aquametals, and Jack in the Box. They weren't really moving, so I rotated that cash into something a little bit more strategic, which brings me to that controversial move of the week, buying QQQ puts. So why buy a put? Well, the job numbers came in pretty ugly, only 22,000 jobs versus 72,000 expected. That screams a slowdown. And when the market gapped higher on the news, options were pretty cheap, too cheap to ignore. So I bought one QQQ put, enough to protect about half the portfolio. Combine that with our VIX calls, and we're pretty much hedged for September and October if things get nasty. But here's the cliffhanger. This could either be the smartest move I make all month or a complete waste of premium. So hey, check out this chart of the QQQ. You see that giant surge, this wave that we're seeing right now? That's what we call a climactic wave, when things get really strong after a weak wave before it. Think about it like a sprinter using every ounce of energy in one final burst. Usually they collapse right after, and that's why I hedged it here. If this was a fake out, what we call an upthrust, I expect the markets to roll over later this month. If I'm wrong, the hedge just costs us a small premium and we move on. Either way, the portfolio is protected. Now, let's highlight some individual names because this is where the fun is. So CDE, this Silver and gold miner is on fire. A couple weeks ago, I said it had room to run to 15, and guess what? It's basically sprinting straight there. I've already sold the $15 calls against it, so profits are pretty much locked in. I don't expect it to run much higher after pulling back, but this is exactly why we positioned early. INOD, ticker symbol INOD, one of my favorite hidden gems. It's an AI company that helps large language models get smarter. And this week, it exploded up a lot yesterday and up another 5% today. That's the kind of momentum that can lead to multi-week runs. And our last stock on the list, Baidu, ticker symbol BIDU. Hardly anyone caught this in the last week's video, but Baidu is breaking out of a long base, and historically, when Baidu starts leading, it's a signal that Chinese tech as a whole might be turning a corner. This could quietly become one of our best performers if the breakout holds. So here's the bottom line. We're outperforming the NASDAQ while running a defensive portfolio. Hedging with puts and VIX calls keeps us safe in September when things turn ugly, or if they turn ugly. And certain stocks, CDE, INOD, Baidu, are proving that even in a choppy market, there are pockets of real opportunity. But hey, don't forget, September is the ultimate shakeout month. Markets are designed to mess with your psychology, up one day, down the next. Don't let it shake you out of good positions. Hey, if you enjoyed this breakdown, hit that subscribe button so you don't miss next week's update on the $100,000 account. And let me know in the comments what you guys think about the QQQ put. Was it a smart hedge, unnecessary risk? What do you guys think is going to happen? And by the way, thanks for watching, and I'll see you on the next one. Cheers.